All right, everybody, welcome back. Okay, can you all see the screen and hear my voice? Okay, good. All right, now this was where we stopped before the break. And now let's continue, okay? Let's continue with a few more transactions. Now, on December the 8th, Fast Forward provide consulting service to ABC company worth 8,000, but this time around on credit. Can you all still remember what is the meaning of on credit? Okay, on credit means if you buy on credit means buy now, pay later. But if you provide a service on credit, you don't pay, it means to say you provide a service now, you receive later. Okay, so the meaning is that you still receiving later. So I provide you a service now, but I'm only receiving the money later. So again, no cash involved. So what are the transactions here? Now I want you to compare the transaction on the 8th and the transaction on the 7th. In both cases, you provided a service. In other words, in both cases, you earn something. You earn a revenue because as long as you provide a service, you earn a revenue. Okay. So how do we record this? Now go back to our journal here. Okay. Transaction on the 8th. Now on both cases, there's still a service revenue, and we know that revenue is always on the credit side. Okay, it's always on the credit side. But now we didn't receive the cash because we provide the service on credit. So instead of cash, we cannot debit, but we still have to debit something. Okay, so what do we debit? We debit accounts receivable. Now this time round it's called accounts receivable, not payable, because the accounts payable is what you owe. It's only when you buy something and you haven't paid yet. Now that you provide a service and you haven't received yet, we call it accounts receivable. Accounts receivable is the opposite of payable. Okay, so don't get confused between these two words. But why accounts receivable is on the debit side? Because accounts receivable is an asset. Now, let's look at this example. Let's say supposing I am your private tutor, and we agree that every time I give you tuition, you are going to pay me $100. Okay? Now, today I given you tuition, but you tell me, sir, I forget to bring money. Can I pay you next week? I say, sure, of course. So now that I provided you a service today, I earn a revenue, right? But because I haven't received anything from you yet, you haven't paid me because you got no money today. So, do you agree that you are owing me money today? And if I haven't received from you today, I'm going to receive something from you in the future. I'm going to get something of benefits from you in the future. Anything that will give me benefits in the future is my asset. Are you with me? This is called accounts receivable. That's why it's on the debit side. Get it? Now, of course, another name for accounts receivable is called debtor. Okay, these two words can be used interchangeably. You can call it accounts receivable or debtor. The other one is accounts payable, or you can call it creditor. Okay, see the difference? Accounts payable is a liability. Accounts receivable is your asset. Okay, now as we go through this, I want you to notice certain pattern. Okay, so certain pattern forming. Okay, I show you what I mean. Look at the next one, December the 10th. Now fast forward, paid $10,000 to the creditor. Now you see the keyword here is paid. Now can you tell me when you pay, you use what to pay? What do you use to pay? Okay, very good. You use cash. Okay, so whenever you see the word pay, it means you use cash. Now, say some of you say, "Oh, but I don't carry cash. I use internet. I use PayNow. I use WeChat Pay." Now, whatever you use to pay, it can be PayNow, PayLah, WeChat Pay, or any other payment system. It is still your money. It is still cash. Cash is a generic term, meaning your money. Okay? Oh, so you still have to use, whether it's your cash, whether it's your bank account or anything, we still call it cash. The word cash refers to your money. Okay? Now, so whenever you see the word paid, your money goes out, your cash goes out. So do you debit or credit cash? Huh? Debit or credit? Credit. Very good. So whenever you see the word paid, straight away, okay, straight away, you credit your cash, you can never go wrong. Okay, like this, you get 1 mark already. Okay, it will always be this way. Whenever you see the word pay, your cash will go out. You always have to credit your cash. When you pay, your cash can never increase. You can never debit your cash. So you always credit your cash. So if you credit your cash, you must debit something else. Then what do you debit? So you get a question here. You pay to who? Creditor. What is another name for creditor? Another name for creditor is accounts payable. So you debit your accounts payable. Is that clear? Okay. So there you are. Credit cash, debit accounts payable. So far so good. Any question? Now again, I want to show you. Okay. Now we all know that this is the answer. Again, I want to show you why is it cannot be this way. It cannot be credit and credit. Okay. Now you cannot say, oh, I pay cash, so my cash goes out, so I credit my cash. Then accounts payable, you cannot say, oh, I remember accounts payable is my liability. So liability is on the credit side. Oh, so just now I credit accounts payable. So now I memorize, I say, oh, accounts payable, I credit. Now I want to show you, you cannot do it like that. Why something is wrong? You cannot credit cash and credit accounts payable at the same time. Okay, and why it cannot happen this way? It cannot work this way. Now you see, we know that when we pay, our cash goes down, so we credit our cash. And if you think that you want to credit accounts payable again, what you're trying to say is that your liability goes up. Your liability increases. That's why you credit liability. Oh, so you credit. But now let me ask you a question. Can it happen this way? When I pay and then my liability goes up some more, it doesn't make sense, right? No logic. Because if I, after paying off my loan, paying off my liability, and the liability goes up some more, then my next question is this. Then why do you even bother to pay? You might as well don't pay. Because the more you pay, the more you owe. It cannot happen this way. So in this case, the accounts payable cannot be credit. It must be debit. You with me? Why? Because after paying, my liability, my accounts payable will drop. It will go down. That's why I debit my accounts payable now. Do you follow? Any questions? Okay. All right. Okay, guys. Any question? Are y'all good? Okay. All right. Good. So now, by the same token, look at the next one. Fast forward now, receive 5,000 from ABC company. Now, can you tell me you receive what? When you see in the word receive, you receive what? Very good. Again, you receive cash, receive money, right? Receive cash. Now, so when you receive cash, tell me, your cash go up or your cash goes down? Okay. So whenever you see the word receive, you straight away debit your cash. You can never go wrong because your cash will go up. And when your cash goes up, you will debit your cash. Are you with me? Okay. So you debit your cash. Now, if you debit your cash here, you have to credit something. Okay. What do you credit? Okay. Go back to the question. You receive from who? ABC company. But who is ABC company? Remember just now, ABC company owe you money. ABC company is your accounts receivable. So, debit cash, you credit your accounts receivable. Got it? Now, after a while, okay, if you practice for a few more rounds, you will see that all the transactions revolve around these few items. In business, you pay money, you receive money, you buy things, you sell things. It all happens like this. So after a while, you will see, you will know all this already. Okay? Can? Okay, last one. Let's do this together. December the 14th. Fast forward, rent 6,000 in cash. Can you see the keyword here is pay? Whenever you see the word pay, what must you do? Straight away, you must credit cash. Okay? Because you pay. Now, if you credit cash here, what do you debit? Then you ask yourself, pay for what? You pay for rent. Huh? So you debit the rent. And why do we debit rent? Because rent is an expense. That's why you debit. Are you with me? And so far so good. Okay. So what we have done just now is that we have looked at these few transactions and we have recorded them down here. This is known as our journal. It is a record book where record whatever happened in chronological order. Okay? So one more time, this is a journal entries that we have. Okay? So a journal is simply a record book where you record the transactions in chronological order. So far, any questions? Okay, good. Now, so far what we have done, what I've shown you is only the journal. But now let me ask you a question. Can someone tell me how much cash do we have left? After all these transactions, somebody tell me how much cash we have. Anybody? Now let's say you are the accountant and I'm your boss. So now I ask you, quick, tell me how much money we have left now. Can someone tell me the answer? Yes? No? Or don't know? So how much money do we have now? So now I want to show you something. You look at the journal, this one. Okay, what I've shown you here, this is the journal entry. Okay, now the journal only shows you the record of your transaction according to the date. On the first, what happened? On the second, what happened? On the fifth, what happened? So it will only show you the transaction in chronological order, in order of the date. But then, if you want to know how much you have left in each account, you need to calculate. And in order to calculate your cash, you need to be able to put all your cash transactions together. Okay? So your journal is not enough. You will bring us to the next step. Okay? Which is the ledger. Very good. So I want to show you right at the beginning. Okay? I want to show you right at the beginning what I told you. Remember the recording process? All right? So from the source document, you will record it in the journal, which we have just done using debits and credits. Now, then from the journal, we need to go on to the ledger. Now, I will show you the ledger. Now, do you still remember what is a ledger? A ledger is simply a record of all your accounts used. And how many accounts did we use in our example here? So many accounts. Cash is an account. Capital is an account. Supply is an account. All these items that you use here, these are known as accounts. Okay, so now I'm going to show you the simplest way to draw the account. This is called the T format. And why is it called the T format? Because it is shaped like the letter T. Each of these T account, each of these represent an account. So we have one account for cash. We have one account for capital, one account for supplies, one account for equipment, and so on. Each of these is called an account. And this way of drawing the account, this is called the T format. Any questions? Okay. Now, this T format is very useful because, you see, look at this T. Can you see it divides the page into two halves? We have the left-hand side. We have the right-hand side. And if you still remember, I told you, the left-hand side represent debit. The right-hand side represent credit. So this exactly ties in with what accountants are using, the debit and credit. The debit on the left, the credit on the right. So they make use of this T account format, this T format to record, okay, the transactions on their account. And how do we transfer? So we need to transfer the information here from the journal. We need to transfer them out here to the ledger. And how do we transfer? Now the transferring part is very easy, it's very mechanical. Okay, now how you transfer is this. Okay, let me show you. You look at every transaction. On the first, your cash. Can you see your cash? Debit 30,000. So you take out this $30,000, you bring it to your cash account and put in debit. Now, debit goes to debit, credit goes to credit. Okay, so it's very straightforward. So the 30,000 here, you put in here. Are you clear? Any question? Okay, so you just transfer out the information one by one. Now, what about the next one? Capital. Capital, can you see you credit 30,000? So you go to your capital account, put here on the right hand side 30,000 because it's credit. Okay. So you go to the next one. Second, December, supplies debit 2005. So you go to your supplies account and then debit here 2005. Okay, let me write this clearly. Okay, this is 30,000. This is 2005. Okay, now then next, cash credit 2005. Now, must I open a new account called cash? No need, right? Because I already got a cash account here. I'll use back the cash account. But this time round, I credit 2005. So put on the credit side here 2005. Are you with me? So you keep doing this one by one until you have transferred all the information from the journal to the ledger. Clear? Okay. So after transferring out the information, your ledger will look something like this. Okay. Okay, I just transfer the information one by one from the journal to the ledger. Okay, and then I complete the following as well. So this is what I do. I'm simply transferring out the information from journal to the ledger. Now, somebody asked, Kylie asked, does the ledger need to write down the date? Do you need to write down the date? Well, I'm showing you this short form guide, no need. Okay, as long as you fill in for our purpose at this level, as long as you fill in the numbers correctly, that's good enough. Now, of course, you are right. Okay, the correct way to write down is that this 30,000 cash, when do you receive? On the 1st December. You have to write down the date like this. Okay? The correct way, the proper way to write is like this. You put down the date, this one. And I also want to show you, you even do something like this. You even fill in here, where does this cash come from? It comes from the capital. Okay? You will do this. Okay, the correct way, you must be proper. You must put down the date, where it come from, and the amount. Okay, but for our purpose at our level, no need to put all this. Okay, you just put down the amount will do. Are you with me? Okay, all right. Now that we have put in all the numbers into our ledger, okay, we have transferred all the information from journal to your ledger. Now we can calculate. So if I want to know how much cash I have, how do I calculate? Now, very easy. Can you see all those on the debit side represent the cash coming in? All those on the credit side represent your cash going out. So if I want to know how much cash I have, I just have to add up all the cash coming in, minus away all the cash going out. In other words, to calculate the balance, if it's on the same side, you add up. If it's on the opposite side, you subtract. Does that make sense? So if I want to know how much cash I have, I take 30,000 plus 4,000 is 34,000 plus 5,000 is 39,000. Then on the other side, I minus 39,000 minus 2,005, I got 36,500. Minus 10,000, I got 26,500. Minus 6,000, I left with 20,500. Are you with me? Now this 20,500, where do I put? I put on the side that is greater. Because I got more money coming in than money going out, the 20,500 is on the debit side. Are you with me? So this is how I calculate my balance, 20,500. Any question? Okay. Now, Shaha, you actually calculated correctly 20,500, but don't put on the credit side. Okay. Put on the debit side. Put on the side that is greater. Got it? Everybody saw this? How I get the balance? So in my cash, so I know how much cash I have. I got 20,500. Now, then what about capital? You see, capital, there's only one. There's only one amount. Oh, since there's only one amount, there's no need to add or subtract. So how much capital we have? 30,000. I just highlight or circle it. Okay. Similarly, what about supplies? I got 2,005 debit. Equipment, 26,000 debit. Clear? Got it, everybody? Any questions? Okay, so far, no question. Very good. Okay, all right. Now, then the next one. What about accounts payable? Ah, can you see we got two numbers here? And they are on the opposite side. See, same side you always add. Opposite side you subtract. So accounts payable, I owe 26,000 here, credit. I pay back 10,000. So you take 26,000 minus 10,000, left with 16,000. 16,000, where do you put? You always put on the side that's greater. Put it in here. Got it? So I still owe 16,000 here. Now, what about service revenue? Can you see I got 4,000 here, 8,000 here? They are on the same side. It doesn't matter whether it's debit side or credit side. As long as they are on the same side, you always add them up. So I got 4,000 here, I earn 8,000 here. Total revenue, I earn 12,000. Does that make sense? Now, what about accounts receivable? I got 8,000 here, 5,000 on the other side. So I take 8,000 minus 5,000. The answer is 3,000. I put on the side that is greater, which is here. So accounts receivable still got 3,000. And the last one is my rent. Okay, how much is the rent? 6,000. There's no need to add or subtract. Okay, so this way of calculating the balance, this is known as balancing the accounts. Balancing the accounts means to find the balance in each account. So now I know accounts payable, I got a balance of 16,000. Service revenue, I got a balance of 12,000, and so on. Okay, so this is called balancing the account. So far, so good. Okay. All right. Now I want to show you something. We have recorded it in our journal. From the journal, we transfer the information out to your ledger. Okay. And then now the last step, the final step. How do we know if we are right or wrong? If you have done everything correctly, you record down in the journal correctly, your debits and credits are correct, you transfer the information to the ledger correctly, you find the balance in each account correctly, then you prepare the trial balance, and you guess what? If you have done everything correctly, everything must balance up nicely. It must balance. Let me show you. Okay, so the last step is this. Okay, now that we have all the accounts, these are called accounts. We have found the balance in each account. Now we have to prepare the trial balance. Okay, what is the trial balance? The word trial balance means you try to balance. Or try means try to. Okay, you try to balance. And if you have done everything correctly, it must balance up nicely. Let me show you. So a trial balance is like this. You list down all the accounts that you use and put down their balances, whether they are on the debit side or credit side. Okay, so I show you an example. The cash. Read out to me how much cash I have. 20,500. You just read out to me the number highlighted. I got 20,500 cash is on the debit side. So cash here, I put down debit 20,500. Got it? Now, what about capital? Well, look at my capital. Capital, I have 30,000 on the credit side. So I put down here, capital, credit, 30,000. Okay? And I fill in all the rest, like this. Okay? I put in all the amount. Okay? And if I've done everything correctly, let me show you. Let's total up. Total up the one on the debit column, 20,500 plus 2,005 is 23,000 plus 26,000 is 49,000 plus 3,000 is 52,000 plus 6,000, what do you get? 58,000. That's the total. Now, what about on the credit side? I got 30,000 here plus 16,000 is 46,000 plus 12,000, what do I get? 58,000. And what do you see? The total on the debit side must balance with the total on the credit side. In other words, the total debits must always equal to your total credits. It must balance. That's why it is called a trial balance. Are you clear? Both must be the same. They will balance. You get the whole picture now? Now, I want to show you how useful this double entry system is. Now, accountant came out with double entry system some 500 years ago. And this system has been in use until today. We are still using the double entry system. It has not changed for over 500 years. Technology have changed, but this accounting system, we are still using the same accounting system 500 years ago. And why? Because this system is so useful, it's so good. Okay, and let me demonstrate, let me show you why this system is so good. Now, you look at your whole process. If you had done anything wrong, if you have made any mistake, your trial balance will not balance. Okay, so you will know if something is wrong or not. Okay, did somebody want to say something? Okay, so if you have done everything correctly, it will balance. Let me demonstrate. Okay, let's say for example, this one capital. Okay, now we know that the capital is credit 30,000, right? Is here 30,000. Let's say when you transfer it to your ledger here, instead of 30,000, you write wrongly. You make a mistake. You put down as 3,000. Okay? Oh, so you made a mistake here, 3,000. Now, and you don't realize it when you prepare the trial balance. Okay, over here, you prepare the trial balance. So your capital, instead of 3,000, okay, you thought, so instead of 30,000, you thought it was 3,000. You put in here. Now, I want to show you something. What will happen then is that you didn't realize, but when you prepare the trial balance, you add up 3,000 plus 16,000 is 19,000. Okay, plus 12,000 is 31,000. You notice now your trial balance cannot balance. Total debit not equals to total credit. Then immediately you sense something is wrong. You realize something is wrong. So you go back and check. And then you realize you made a mistake here. This is not 3,000. It's supposed to be 30,000. And then you correct your error here. Change this to 30,000. And then you guess what? It balances up nicely. Are you with me? Do you understand now? Now, can you see the biggest mistake is this? You know, it is okay to make mistake. We all do make mistake all the time. But the worst thing is that you make a mistake and you don't even realize it. But using this double entry system, this accounting system, if you make an error, it will always show up. It will show up in your trial balance. You cannot balance. And when you cannot balance, you know that you know that you know that something is wrong. So you can go back and check. That is a good checking, self-checking mechanism. This is what the double entry system is all about. Any question? Any question? Okay. Now, so now that we know that the trial balance balances, then we can go to the next step, which is to prepare the financial statements, which we are going to cover in topic 3 and 4. Because if your trial balance cannot balance, you prepare the financial statement, also no use. You know there's an error, there's a mistake. Huh? So this is what the double entry system is all about. So far, so good. Any questions? All right. Now I'll show you the slides. Okay, so this was the transactions that we have done. Okay. Now I've shown you, okay, how to apply the double entry on these transactions here. Okay? And we have gone through it together. So I'm not showing you this one by one. This is what we have done. Okay. Oh, okay. So this is what we have done, and I show you using the our results here. Now, and then the last part, okay, where we go to our financial statement, okay, we will cover this part in topic number 3 and 4. Okay, next week, next lesson. Okay, any questions so far? Okay, if not, this is the end of topic number 2. So far, so good. Now, just a reminder, okay, your first quiz, your first test will cover topic 1 and 2. It will start next Friday. So next week, I will tell you more about it. Okay? All right. If there are no further questions, that's the end of today's lesson. Good. Okay. If there are further questions, if you have any question, you can ask me now or you can email me. Okay? All right. Right. You're most welcome. If there are no further questions, that's it. I will see you next week. Okay. Yeah, I will stay on a while more. If you have any question, you can ask me. If not, you can email me also. Huh? If not, I will see you next week. Okay. All right. See you guys. All right. Stay safe and stay healthy. Okay. Okay. Bye. All right. I am logging off now.